Hello, everyone. I'm Vanessa Sheppard for those who don't know me, but most of the people that are here know me. I've been doing real estate for about 2.5 years, almost 3 years. I specialize in working with buyers, sellers, and I also work with investors. What made me join real estate is just I wanted to have a place to call home in the simpler terms. I was a Navy brat, so I'm used to moving from place to place every 3 years, every 3 to 4 years. So I never had that solid foundation. And the simplest way for me to visualize that and materialize it was for like home ownership. So I was very much interested in learning how to buy a home, learning how to make money off of homes and property, and most importantly, learning how to buy land. So with my passion, I like to help others do the same and maintain the same. So with that being said, that's what I'm doing. And yeah, I hope to reach as many people as possible and help make their dreams of home ownership or becoming an investor possible. Yes, and we have Tony. Take it away.
Hey everyone, I'm Tony Marino. I am branch manager with the Marino team in Naperville at First Centennial. I've been originating for about 10 to 11 years now. I'm licensed in Illinois, Colorado, and Florida. Specialize in getting people into home ownership using down payment assistance. Uses education to help people understand how they can become a homeowner and part of the American dream. The American dream. Homeownership is still the American dream, and buying a home can be an exciting and intimidating process. I believe in the American dream, and I feel most people still do and are unsure as to whether it is achievable anymore with rising interest rates. This webinar will provide you with the information that you will need to help you begin the dream of homeownership. So why seek the American dream? The market is becoming a buyer's market. Prices have been coming down. There is a need and want to become a homeowner. However, there is too much misinformation out there. People think that they need to put 20% down, learn to set aside your lack of confidence of becoming a homeowner. Many think they are years away from owning a home. 50% of renters think they cannot afford the down payment. However, they have the financial means to maintain the monthly mortgage payment. That is about what they pay in monthly rent, which we will see that later on. Find out about the financial assistance, down payment, and closing cost assistance available to home buyers. Enhances the quality of life, helps individuals with wealth building and equity appreciation. 45% think you need a very good credit score to get a mortgage loan today. They think a good credit score is 740, 780. 35% think you need 20% down payment. And then 31% don't think they can qualify for a mortgage loan at all. So what are the advantages of homeownership? A place of your own versus renting. Instead of paying rent each month, paying someone else's mortgage, they're gaining equity. Stable housing costs versus rising rental costs. Build equity, which builds wealth. Get tax deductions on interest and real estate taxes you pay. Borrow against the equity you build in your home or convert it to cash later when you retire. Homeowners have 45 times greater net worth than renters. Buying a home is a huge step, but buying a home doesn't have to be the challenging. So what if we can help you with missing down payment? So helps an individual overcome a financial barrier to home ownership. Financial assistance is typically used for your down payment and the closing costs. Your team, Vanessa and I, can provide you with access to the IDA program, which is the Illinois Housing Development Authority. They have 3 different programs, which we'll get into more, but they offer either $6,000, $7,500, or $10,000. And we'll talk about that more later on. So what is involved in the home buying process? So this is a roadmap to getting to closing. The very first thing that you will need to do is get pre-approved. So pre-approval, this will determine how much you qualify for, what loan program we're going with, and after pre-approval, you start the home search with Vanessa. Out looking, next step would be making an offer. Once you have an offer accepted, you'll send me the contract, and then we'll go to application. And then I'll need more supporting documents. Next is you'll then do a home inspection. Then we'll go into processing. So processing is when we do the pre-approval, I don't have all of your documents already. So later on, we'll get bank statements, more of your documents. So what happens is our processor will make sure that all the documents match up to the application. Once that's done, they're going to submit that into underwriting. So you'll start shopping for homeowners insurance. We order the appraisal. You'll pay for the appraisal. So there are three things, and we'll get into this more later too, but there's three items that you pay for before closing. Number one is your earnest money, which the seller takes, they hold on to that, and that goes towards your down payment at closing. Number two is your appraisal, and number three is your home inspection. So number 12 is we submit it to underwriting. We then receive a conditional approval from the underwriter. And conditions, maybe we need another pay stub. We need an explanation for an address that showed up on the credit report, stuff like that. So we gather those conditions. Once we have all that, we resubmit it into underwriting for the clear to close. Once we have the clear to close, we can then go to closing. So those are the steps, and we'll get a little bit more into it here. Get pre-approved for a home loan for free. FCM Express, I'll talk about that later on, where you guys can download it. Lender helps you determine how much you can afford. Lender can help improve your credit score if necessary. Lender will make suggestions or give credit repair plan. After pre-approval, you'll meet with Vanessa to discuss your housing needs and go shopping. You'll let her know the price, which the pre-approval will have your purchase price that you qualify for, size, neighborhood, lifestyle. Then you go out to start looking, make an offer. You select an attorney, perform your due diligence, home inspection, radon inspection, roof inspection. That is all within 5 days after you go to contract. You send executed contract and loan docs to your lender. Loan goes through processing, order appraisal, order verification of employment. Loans go to underwriting for approval. We talked about the conditional approval, and then clear to close. Oh, and then for closing, you will go to a title company or an attorney's office that will fund the closing. That's where you sign documents. Seller receives checks, which is the money you borrowed from the lender. Buyer receives keys and the deed on that day, and you can move in that day also. So why don't most people buy a home? Not enough money saved, credit not good enough, don't think they can buy. With knowledge of some exciting loan programs gets you dreaming of home ownership. So here are the loan programs out there. We have a VA loan, USDA loan. We have a conventional with only 3% down. This is for first-time home buyers. 5% down conventional. These are all minimum down payments. 5% you have to put if you're not a first-time home buyer. FHA loan, 3.5% down, scores as low as 580. And then there's also a what's called an FHA 203K, where you buy the property. It's a rehab loan. buy and fix it up. So the programs that we're going to be talking about are these last three. So what we do is we will be attaching one of these IDA programs to a conventional or a FHA loan. So the first one is you receive $6,000. It's a forgivable grant. So it's forgivable after 10 years living in the property. So for this one, it's prorated every month that goes by. So say in 5 years, you decide to sell it. So in 5 years, you probably only owe $3,000. That $3,000 will come out of the net proceeds of the sale of the home. And if you live in there more than 10 years, you don't owe anything. The second one is $7,500. This is a zero interest loan, deferred payments for 30 years. So you don't owe anything on it. When you owe it back is when you're going to either sell it, refinance, or the 30 years are up on the mortgage. You'll owe that $7,500 back eventually. And then the last one is $10,000. This is zero interest loan with a monthly payment of $83.33 per month. So IDA available for first-time and non-first-time home buyers within IDA's income and purchase price limits, which we'll get into those limits in the next couple of slides. Must purchase a 1 to 2 unit single-family property within the state of Illinois. So single-family condos, townhomes, and then the 2-unit has to be an attached 2-unit. Borrowers must occupy the property as primary residence. No non-occupant co-borrowers allowed. So if someone was helping with like a co-signer who's not going to be living in the property, cannot be on the loan. If they are, we cannot go with the IDA program. And it's a 30-year fixed rate loan. The qualifications for IDA. So income and property limit, that slide's coming up. Minimum credit score is a 640 for FHA or conventional. Maximum total debt to income ratio, we cannot exceed 45%. So what the debt to income ratio is when we pull credit, we're going to add up all your monthly debt that shows up on the credit report. Then we're going to add the proposed monthly payment of the home that you're purchasing, and we're going to divide that by your gross monthly income. And that's how we get the debt to income ratio. And we have slides later on about the debt to income ratio. Borrower must contribute 1% of purchase price or $1,000 from buyer's own funds, whichever is greater. And then you're required to take home ownership counseling, which it's just an online class that you have to take, and they give you a certificate. IDA's interest rate, there's only one interest rate offered each day by IDA. So every morning we get an email from IDA and they tell us what their interest rates are. The IDA down payment assistance is a second lien on the property. So only the 10,000 program requiring any repayment. So here's an example. These are the rates as of today. So if we did an FHA loan with IDA, and say we did actually all of them are at 6.25% today. That's the 30-year mortgage rate. And then conventional today is at 6.625. Here are the income limits. So if you make more than 125,000, you then don't qualify for IDA. And then the max purchase price is $349,525 for a 1 unit, and then $447,542 for a 2-unit. And there's no exceptions to those. If you're over them, you can't go with the down payment assistance program. So let's take a look at if you were deciding to rent versus buying a $300,000 home. So if you're looking to rent, on the left-hand side there, you're always required to pay for the first month's rent and give a security deposit. So if the first month's rent was $3,000 and then the security deposit was $3,000, you're giving upfront $6,000. So in this example, it's $300,000 FHA, 3.5% down, going with the $10,000 down payment assistance. Average closing costs. So this is just an example. The average closing costs are really like $5,500. In this one, it's $5,000. And then there's an IDA origination fee of 1% based off the loan amount. So the IDA origination fee would be $3,000. So let's take a look at, in a purchase, there are 3 buckets of cash. Number 1 is your down payment. Number 2 is your closing costs. And number 3 is your prepaid items. Prepaid items is setting up your escrow account, which I'll talk about when we get down there. So bucket number 1, you're required to put 1% of your own funds into the transaction. So in this example, we put $3,000 for your earnest money. So upfront, you're already putting 1% into it towards your down payment. Then what's left of that $10,500, you have $7,500. So IDA will then pay for the rest of the down payment, $7,500. So down payment is only $3,000, your earnest money, and that's your 1%. Bucket number 2, the closing costs will come out to $8,000 in this example. So we have $2,500 left over. We have $5,500 still left of closing costs. One of the things that Vanessa will help you out with that you can do is you can when making an offer, you can request that the seller gives you a closing cost credit. And conventional, you can get up to 3% as a closing cost credit, and FHA, you can get up to 6% based off the purchase price. So all we need is $5,500 from the seller. So if we get $5,500 that the seller pays, closing costs are covered by IDA and the seller. So closing costs would be 0. Bucket number 3, prepaid items. So this is escrow account. Escrow account is a savings account for your real estate taxes and homeowners insurance. So each month when you're making the mortgage payment, you're also paying the monthly real estate taxes and homeowners insurance. So when you make the payment, the bank will take the real estate taxes and homeowners insurance out of it, and they will throw that into your escrow account. So, and then when the taxes and the homeowners insurance is due, they'll take that money out of your escrow account and pay for it. So you never have to worry about paying the first installment, second installment of the real estate taxes because you're paying it monthly. So here in Illinois, the taxes are in the rear. So the tax bills coming out this year are really for 2022. So you didn't live in the property, so the seller has to give you a real estate tax credit. And that real estate tax credit almost always covers the 3rd bucket. The only time it does not is if it's a new construction home, or if there is a senior exemption or a senior freeze on the tax bill. It will cover, like if there's a senior exemption, senior freeze, it will cover some of it, but not all of it. But most of the time, you do not have to worry about bucket number 3 because of the real estate tax credit. So in this example, all you are putting into the transaction is $3,000 versus if you decided to rent a $3,000 place, you're putting $6,000. So you're putting $3,000 less into buying a $300,000 home. So let's go here. So what is your housing payment? So this is an example, $300,000, just like the worksheet that we just looked at. This is assuming a 6% interest rate. The interest rate's 6.25% today, but your principal and interest, $1,766. Your this is for the $10,000, $83 that you have to pay monthly for 10 years. Real estate taxes, $553. Homeowners insurance, $100, and then mortgage insurance is $204. So the total would be $2,706 versus paying $3,000 in rent. And I'm going to go back to mortgage insurance real quick. So what mortgage insurance is, you're required to pay mortgage insurance if you don't put 20% down. So throughout time, when you do have 20% equity in the home, what you will do is if you have an FHA loan, FHA loans, the mortgage insurance is for the life of the loan. So what you would do is you would then refinance into a conventional loan. Conventional, once you have 20% equity, that mortgage insurance will come off. So you don't have to refinance. I mean, if interest rates come down, you'll refinance with a conventional, but that's the advantage with conventional versus FHA is conventional, the mortgage insurance will eventually drop off once you have 20% equity. Oops. So let's summarize the 3 buckets of cash. Bucket number 1, down payment, IDA, and then your 1% that you have to put in will be for bucket number 1. And then for conventional, 3% if you're a first-time home buyer is the minimum, 5% non-first-time home buyer, and then 3.5% for FHA. And the minimum credit score for FHA is 580, but if we go with the down payment assistance, you have to have a 640 credit score. Bucket number 2, closing costs, approximately $5,500. Additional 1% fee if using IDA funds. Who pays? You can pay, the borrower, IDA can pay, and or Vanessa can negotiate to have the seller pay. Seller either outright agrees to giving you the closing cost credit, but there are cases where you may make an offer for $300,000 with the $5,000 closing cost credit. Seller may come back to you and say, well, we'll accept the $300,000, but we're not giving the $5,000. So what Vanessa can do is she can go back, if you really want the closing cost credit, go back and say, we'll give you $305,000 for the purchase price. And then we'll give you, and then you give us the $5,000. The seller is still getting their $300,000 that they want, and then you're getting the $5,000. And then if non-IDA loans to help with closing costs, another way to get the fees down is we can increase the interest rate to then give you a closing cost credit also. Type of property, SMS. This is for the getting a seller to give you a closing cost credit. Vanessa defines you a motivated seller. Home has had at least 1 price reduction, has many days on the market. A motivated seller sells for less. A motivated seller allows you to gross up the purchase price and will participate in your closing cost assistance. So here's another example that I just talked about. Offer the seller a higher adjusted purchase price by the amount of the closing costs. If the table of expectation was $200,000, offer $205,000, provided the seller will pay $5,000 of the buyer's closing costs. And then Vanessa will check to make sure that the home will appraise for the increased purchase price. Seller is very happy, still receiving his table of expectation price. Buyer's very happy how much of his own money has to be used for closing costs. Because if we get the $5,000 closing cost credit and then IDA, the closing costs are 0. And then here's bucket number 3, the prepaid items. So there is what's called prepaid interest. This is part of the prepaid items. Prepaid interest, it depends on when you close in the month. So if you close the middle of the month, you'll owe 15 days of interest. If you close at the end of the month, you'll owe 1 day of interest. So the reason you're required to pay interest for whatever is left in the month is say you close in March, your first payment wouldn't be till May 1st. And that May 1st payment is really for all of April. So if you were to close the 15th of March, they want you to pay interest for the rest of that month. but that prepaid interest is still, it still will be covered by that real estate tax credit. And then reserves, the escrow account, you'll always put 3 months of homeowner's insurance in your escrow account at closing. And then depending on what month we close, it'll either be 2 to 10 months of real estate taxes. And then the seller credit will cover the third bucket. So how much is your own funds? Bucket number 1, down payment, 1%. Bucket number 2, closing costs, 0 with IDA and or seller paying closing costs. And then bucket number 3, 0 with the seller real estate tax credit. So what are you waiting for? I'm waiting because interest rates are too high. I believe interest rates will be lower in the future. Would you take action if your interest rate could be 2% lower in the first year and 1% lower in the second year? For example, if interest rates were normally 6%, would you take action if your interest rate was 4% in the first year and 5% in the second year? Let's explore the temporary buy down. And this temporary buy down that we're getting into, this does not go with IDA. This is just an FHA conventional by itself. So this is for if you're not concerned with what you're bringing to closing, you're more concerned with the monthly payment. So the benefits can be used for a primary purchase of single family residence, townhome, condo, conventional FHA, VA, and reduced payment for 12, 24, 36 months. So how it works is the seller must pay for the buy down fee. So this goes back to getting a real seller closing cost credit. Instead of offering a lower purchase price by $10,000, offer a price closer to list price, asking the seller to pay for the buy down fee. So here's a table of what it would look like. So if the note rate was 6%, the first year your interest rate would be 4%. So typically if the 6% rate, if you were paying the 6% rate, your monthly payment would be $2,248.31. But your first year it's going to be 4%. So you're only paying $1,790.31. So that's a difference of you're paying $458 lower. So if you times that by 12, the annual buy down is $5,496.09. And then the second year, it would go to 5%. And then your payment would be $2,013.08. So you're saving $235.23 a month that second year. So that's annualized, that's $2,822.80. And then after that, 3 through 30, it goes back to 6%. Hopefully by that point, rates have come down and you have already refinanced into a lower rate for a 30-year fixed. So the total buy down funds would be $8,318.89 based off a $375 purchase price. So this is what the seller, you would have to get the seller to give you a credit for, to pay for that buy down. So you need $8,400 from the seller to pay that down. And then your first year would be 4%, second 5%, and then 6% the rest of it. So now let's take a look at how do we meet the 3 C's of lending. So the first C is credit. So the minimum credit score is 580. And then with the down payment assistance, you need to have a 640 credit score. Cash flow or gross monthly income, max 45% debt to income ratio for the IDA, 50% for conventional, 55% for FHA. So without going with IDA, you will qualify for more if you go conventional by itself or FHA by itself. And then C, collateral. So credit scores obtained from any one of the 3 national bureaus, Experian, TransUnion, Equifax. lenders take the middle score of the three. So we throw away the high score and we throw away the low score, and then we use the middle score for qualifying. So if you had, for example, if you had a 639, 640, 641 credit scores, we're taking the 640. And the scores range from 0 to 850. Again, need 580, 640 credit scores. And then I can provide credit rescore or credit repair if needed. So let's take a look at the second C, which is cash flow. So this is the debt to income ratio. So this is adding your monthly debt that shows up on the credit reports. That would be minimum payments for credit cards, student loans, auto loans, any personal loans that would show up on the credit report. We add all those together, and then we're going to add the proposed monthly payment of the home divided by your gross monthly income. And then this is what will be in your housing payment. Principal and interest, homeowners insurance, real estate taxes, private mortgage insurance if you're not putting 20% down, flood insurance only if the property is in a flood zone, and then homeowners condo association dues if it's a condo or a townhome with the monthly association. And then here's another example of what the monthly payment would look like. This is for 200,000. You got 1,162.83 for the IDA, real estate taxes 417, homeowners insurance 75, mortgage insurance 135, and then your total monthly payment 1,872. So so FCM Express work for calculating the housing payment? So with this, I don't have we'll get into that later because I have something else later. So next, calculate your gross income. You qualify on your gross, not net income. The only time that we go off of net is self-employed. So gross salary, hourly times the rate. Bonus, we will average it for the past 2 years. Commissions, we average it for the past 2 years. Overtime, we average it for the past 2 years. And then if you're self-employed, say you file a Schedule C, self-employed is a little bit different. We don't go off of the gross. So Schedule C, you put your gross at the top on Schedule C. You have your deductions, and then at the bottom, you will have your net amount. We average the past 2 years of the net. There are some things that we can add back into it, which if you are self-employed, we can go more into that. So now that I know my housing, consumer debt, and my gross income, how much of a loan can I get pre-approved for? Again, the lender, they use the debt to income ratio, determine if you qualify for a loan, debt ratio, monthly housing plus consumer debt, consumer debt divided by total monthly gross income. Cannot exceed 45%, cannot exceed with IDA, cannot exceed 50% for conventional, and cannot exceed 55% for FHA. So let's see if we've answered these common questions. How much down payment do I need? As little as 1% if we go with IDA, and if we get the seller to pay closing cost also. How much savings do I need in the bank? Could be 0. How good does my score need to be? 580 to 640 or better. Can I get a lower interest rate in my first 2 years? Yes, with the 2-1 buy down. What does my housing payment consist of? That you can calculate on FCM Express. What are closing costs? They're about $5,500. And then what are escrows? Amounts set aside for real estate taxes and insurance. And then how much do I qualify for? Debt ratio not to exceed 45%, 50% for conventional, 55% for FHA by itself. you're going homework today, get pre-approved for free with me. You can use the FCM Express, which I have a QR code that is coming up that you can then download the FCM Express. FCM Express, you can apply, fill out an application to get pre-approved, and there are calculators on there where you can play around with to see what monthly payments would look like. Assemble necessary documentation for a full application, get an automatic underwriting approval. Pre-approval letter is issued. And then now that we have a yes to your loan request, go shop for a home with Vanessa. And then for pre-approval, the only things that I am looking for document-wise, previous 2 years W-2s, 2 recent pay stubs, so most recent 30 days worth of pay stubs. And then if self-employed, I will either need the last 2 years of your personal tax returns. And then if you have business tax returns, I will need 2 years personal and then 2 years business. So then I can calculate the income. So Team Marino commitment, loan pre-approval in 24 hours, committed to financing dream homes and always being available for questions. Here's my phone number and my email. And then if you want, here's the QR code to download FCM Express. And then that is, and then with any questions.
Yes, do anyone have any questions regarding anything? Regarding the numbers, the pre-approval process, down payment assistance? You can either unmute yourself or put it in the chat. I do want to let you know that we will be doing another seminar of this nature probably next month. And we may have other programs as well that Tony can introduce you to that can help you with this process. Yeah. But for everyone that's attending, I do want to thank you for, just making the first step of your home buyer's journey. So thank you for
and if you have
listening.
What's that?
So we do have a question. We have a question from Naya. I'm sorry if I mispronounced your name incorrectly, but we have a question saying, how long does the entire process take?
So pre-approval, I can get done in 24 hours. When you go to contract, when you have an accepted offer, depends on the seller, but we can 30 days. 30 days through that whole roadmap that I showed in the beginning.
I do have a question. How long does this pre-approval last?
That's a good question. Pre-approval lasts for 4 months. So the reason why pre-approvals expire is because the credit report expires. So in 4 months, the credit report will expire. And then to get an updated one, all we have to do is repull credit, and then I issue a new one.
Okay, and Stephen asked, is there a way that he can rewatch the Zoom? Unfortunately, we did not. Well, actually, is there?
It should be recording.
Yes, I see recording. So are you going to? It should be.
So yes, you can.
Yes, you can.
We'll send it out. Everyone on this will send an email out to them with the recording.
And if you could take your phone and see if the QR code works, that would be great. And download that.
It. Yeah.
You can just hover it over the screen and it should take you directly there. Okay. It worked for me. Okay, and Leah said that the information was very clear. Well, thank you, Leah, and thank you, Tony.
Thank you. Yeah, thank you. Yeah, and if you guys have any questions, don't hesitate to pick up the phone.
Again, you can reach out to Tony, or you can reach out to me directly regarding this process. And it's just not for the IDA program. He does it if you just want information regarding how to get pre-approvals, or if you want to see what other programs you qualify for. So they're not
Yeah,
just specific to the IDA program, just to let you know.
Yeah, there's plenty of other programs out there that we can look at. And then
I have a quick
and
question.
here's all Vanessa's info too.
Absolutely. You can reach me by via email or the cell phone number that's listed on this page. Okay, and if that's it, if there's no more questions, I would like to thank everyone for attending. Thank you, Tony. And if you want some more information or you want to tune into another seminar, again, we're planning on doing it next month, but I will promote it as well. You can share this with anyone who you feel may need this information or who is on the lookout to becoming a homeowner. So thank you.